Have you ever wondered how your money will hold up during an economic crisis or a sudden personal emergency? It can be hard to imagine, but the truth is, emergencies can strike at any moment, and without the right protection, your financial stability could be at risk. But don't panic just yet. In today's video, we're going to talk about 8 smart ways to protect your money during a crisis. These strategies will help you prepare for the unexpected, so your hard-earned money stays safe, accessible, and ready for anything life throws your way. So, whether it's a global recession, a health emergency, or a personal financial setback, let's dive right into how you can shield your finances and emerge strong. 1. Build and strengthen your emergency fund. When it comes to financial protection, your emergency fund is the first line of defense. Think of it as a safety net, cushioning you when life suddenly takes an unexpected turn. In a crisis, it's essential to have cash available that you can quickly access, without having to rely on credit cards or scrambling for loans. Now, most financial experts recommend saving at least 3 to 6 months' worth of living expenses in your emergency fund. This provides you with enough security to cover the basics: rent, utilities, groceries, and transportation, if your job is lost, illness strikes, or any unexpected expense arises. While this may seem intimidating, you can start small. Even saving just $50 or $100 a week can quickly add up over time. And with regular contributions, you'll find yourself more financially stable and less stressed when a crisis occurs. To make sure this emergency fund is safe and growing, place it in a high-yield savings account or a money market account. This way, your money can earn some interest while being accessible when you need it most, all without the risk of losing value. 2. Diversify your investments. In times of uncertainty, diversification is key. Relying on just one type of investment can be incredibly risky during a crisis. When you diversify your portfolio, you're spreading your money across different types of assets, reducing the chance that one major downturn will impact everything at once. Think of it this way: don't put all your eggs in one basket. Diversification means mixing things up: stocks, bonds, real estate, precious metals, even cryptocurrency. When one sector struggles, another might be performing well, keeping your financial health balanced. This approach helps to insulate you from major losses in a crisis. If you're unsure about where to start, it's always a good idea to reach out to a financial advisor who can help you create a tailored strategy that suits your goals and risk tolerance. 3. Pay down high-interest debt. Next up, let's talk about high-interest debt. If there's one thing that can turn a bad situation worse during a crisis, it's carrying credit card balances or other high-interest debt. These types of debt can quickly spiral out of control, especially if your income is suddenly reduced. The priority here should be to pay down high-interest debt before diving into investments. Start by focusing on the debts with the highest interest rates: credit cards, payday loans, or personal loans. This will save you money in the long run, as you'll pay off less interest over time. The sooner you pay down high-interest debt, the sooner you'll be able to allocate funds to more productive financial areas. And if your credit card balances are hefty, consider transferring them to a 0% April balance transfer card. This gives you up to 21 months to pay off the debt without the added burden of interest, allowing you to get ahead of your finances without rushing. The peace of mind from clearing high-interest debt will provide much-needed financial freedom in times of crisis. 4. Automate your savings and bill payments. Let's talk about automation and how it can be your financial lifesaver. When things get stressful, it's easy to forget paying bills or saving money. But when you're focused on an emergency or juggling a crisis, automating your savings and bills ensures that your financial responsibilities keep running smoothly, even when you're not actively thinking about them. Set up automatic transfers from your checking to your savings account each pay period. That way, you're consistently building your emergency fund or investing in your future without needing to worry about it. On top of that, automate bill payments for your utilities, rent, or loan payments to avoid late fees and unnecessary stress. Automation ensures that you're disciplined with your money and stays on track toward your financial goals, even when life gets a little chaotic. 5. Use two-factor authentication, 2FA, on financial accounts. In today's digital world, cybersecurity is more important than ever, especially during times of financial instability. Financial data can be targeted by hackers or fraudsters, and the last thing you want is to lose your hard-earned money to an online thief. One simple but incredibly effective way to protect your financial accounts is by enabling two-factor authentication, 2FA. 2FA adds an extra layer of security to your online accounts. In addition to your regular password, it requires a second form of verification, such as a code sent via text message or generated through an authentication app. This means even if someone gets hold of your password, they won't be able to access your accounts without that second confirmation. Make sure you enable 2FA for all your financial accounts, banking apps, credit cards, investment platforms, and even shopping accounts. It's a small step that can make a huge difference in securing your money. 6. Store cash in a secure location. While digital payments are incredibly convenient, cash still has a place, especially during an emergency. Whether it's a natural disaster, a power outage, or a situation where digital payments aren't working, having cash on hand can be a lifesaver. Store your emergency cash in a safe and secure location, such as a lockbox or a small fireproof safe. Depending on your personal circumstances, having a few $100s available can help you cover urgent needs like food, transportation, or even medical expenses if necessary. Cash is universally accepted, which can be a huge advantage when electronic payment methods aren't available. Having cash accessible provides an extra layer of financial security when digital systems are down, and it's a great backup plan when you need it most. Don't forget to periodically check the cash you're storing to ensure it's in usable condition, and also to add small amounts over time. 7. Review and update your insurance coverage. Insurance is one of those things we don't always think about, but it's a critical tool in protecting your financial future, especially during a crisis. If your coverage is outdated or insufficient, you could find yourself underinsured when disaster strikes. Take the time to regularly review your insurance policies, health, home, auto, and life insurance. Make sure your coverage is adequate for your current situation, and don't forget to shop around for better rates. For instance, if you've moved to a new house, started a family, or bought a new car, your insurance needs may have changed. By keeping your policies up to date and looking for better deals, you ensure you're protected in case of an emergency without overpaying for coverage you don't need. 8. Create a bare-bones budget for emergencies. Last but not least, let's talk about the bare-bones budget. In a crisis, knowing exactly how much you need to survive is invaluable. A bare-bones budget is a simplified version of your usual budget. It only includes the essentials, such as housing, utilities, food, and transportation. Creating this budget in advance gives you a clear understanding of what you need to cover your basic needs. That way, if a crisis strikes and your income is cut, you'll already know exactly where to cut back without impacting your survival. Knowing your baseline expenses makes it easier to stretch your dollars and adapt to challenging situations. This strategy gives you a clear picture of your minimum living expenses, helping you prepare for any financial difficulties and ensure that you don't overspend during tough times. It's like a financial first aid kit you can rely on in any emergency. So there you have it, 8 smart ways to protect your money during a crisis. By building an emergency fund, diversifying your investments, paying down debt, and taking the necessary steps to safeguard your financial future, you'll be in a much better position to handle whatever challenges come your way. Remember, being proactive today means peace of mind tomorrow. If you found these tips helpful, be sure to like, share, and subscribe for more practical advice on how to protect and grow your wealth. Stay prepared, stay safe, and stay financially secure. Thanks for watching, and we'll see you in the next video.